When it comes to making the most of your 401k, you're probably wondering, what's the ideal contribution per paycheck? This is a question that's often overlooked, but knowing the right amount to contribute can significantly impact your retirement and ensure you're maximizing your financial future. Let's break down the key factors that will help you figure this out. First, let's talk about the basics. If you're serious about building your retirement fund, you should aim to contribute at least enough to get the full employer match. This is free money and one of the easiest ways to supercharge your savings. If your employer offers, say, a 100% match on your first 5% contribution, then contributing that 5% is essentially doubling your investment without any extra effort. But what if you could contribute more than the minimum? Ideally, you want to maximize your annual contribution limit, which is $22,500 for most people in 2025, or $30,000 if you're 50 or older. To hit this goal, you'll need to divide your total contribution by the number of paychecks you receive each year. So, let's say you get paid bi-weekly. That's 26 paychecks. To contribute $22,500 in 1 year, you'd want to set aside about $865 per paycheck. If you're 50 or older and targeting $30,000, that's roughly $1,150 per paycheck. Now, I know what you're thinking. That's a lot of money to set aside each paycheck. And you're right, it's important to be realistic about your budget. But the closer you can get to these contribution targets, the better off you'll be long term. Think about it. Time in the market is one of the most powerful ways to grow your wealth. The earlier you start contributing more, the more you benefit from compound growth. Of course, if you're thinking about your future wealth and protecting it, you've likely heard about gold IRAs as an option. But don't just take my word for it. If you're serious about protecting your wealth over the next couple of weeks, I highly recommend you check out the free guide in the description below. Thousands of Americans are opening gold IRAs to protect their savings, and it could be the right move for you as well. But let's get back to your 401k. The truth is, the ideal contribution really depends on your goals. If you want to retire early, or with more financial freedom, you might want to consider pushing those contributions higher, even beyond the employer match. And yes, this could mean sacrificing a bit now, but the long-term benefits of having a robust retirement account are worth it. It's also important to balance between your 401k and other investments. If you're already contributing enough to get the full employer match, but you have the capacity to invest more, consider whether you're maxing out your IRA or looking into alternatives like a gold IRA. Gold IRAs, in particular, have become a popular option for many high net worth retirees looking to diversify their portfolios and protect their wealth in uncertain times. If you're an American retiree with 100K plus in your IRA or 401k, or even 5 plus in savings, this is the perfect time to explore options like gold IRAs. You want to position yourself for long-term success, and with the right strategy, you can safeguard your wealth against inflation and market volatility. Before we wrap up, let me just say this. Putting the right amount into your 401k is crucial, but making the decision to diversify your retirement savings into something like a gold IRA can be even more beneficial. If you're serious about protecting your wealth and setting yourself up for a successful retirement, click the first link in the description. Get that free guide and take action now. It's your future. Make sure it's secure. To recap, contribute at least enough to get the full employer match, aim to maximize your contribution limit, and consider diversifying with options like gold IRAs. The earlier you start and the more you contribute, the better your retirement will look. And don't forget, if you've got 100K plus in your 401k, this strategy can be a game changer for you. Thanks for watching, and I hope this helps guide you toward making smarter, more informed decisions about your retirement savings.